As you know, in most of the GCC countries, and I'm sure in many of the MENA region, um, regulators created those regulatory sandbox environment to support the fintech. So actually, some of the countries around us became fintech hubs. So it's there, it's supported, it's happening. Uh, we should always look at how we can benefit from those innovations, from the agility and the way they are operating. Uh, we see them here at Boubyan as potential partners. We established a department mainly focusing on partnership and innovation to focus and look and source those opportunities of partnering with fintechs. Here in Kuwait, whenever we want to do that, we need to do it also with the approval of the central bank. There is an acceptance from the central bank, sometimes cautiously approving those, and I totally understand that, because at the end of the day, what a regulator wants is customer protection, data protection, elimination and avoidance of conduction of any financial crime through those facilities. And this is what we want also as banks. So if we can work within that environment and assuring those things, I think we can all benefit from that. The one concern is that once you have those controls on the fintechs, they might lose that agility and ability to innovate quickly. And then others might come and penetrate some of the market unofficially, which is again something we cannot very much avoid. It will happen, but it's an ongoing thing. Yeah, it's never stopped, never reached an end. You should be always ready to go to the next move, partner with the right partner, and expand that network of partnership, I would say, with those fintechs, maybe by creating different ecosystems to better serve the customer at the end of the day. And it would be a win-win-win situation to the bank, to the fintech, to the customer. That's how I see it, at least here, and that's how we are tackling it at Boubyan. It's welcomed. We're looking for opportunities in that. Regulator is welcoming it. But again, the regulator needs to make sure that the environment they're operating in within is well controlled to avoid those risks that I mentioned at the beginning. I think we had an interesting experience just recently where we launched the first Islamic digital bank in the UK, NOMO, through our subsidiary there, Bank of London and Middle East, BLME. The idea of launching that digital bank is, of course, to be present in a different way in the UK market to our, mainly our GCC customer. So in short, the answer is yes, it helps, but we need to look at it from two different perspectives here. So there is a yes and there is a no to that answer. Yes, it helps a lot. And we are looking to serve GCC residents of the GCC to begin with, and maybe the MENA region later on, who want to open an account and start a relation in the UK. But can that digital bank in the UK offer the services directly to customers in the GCC for their need in the GCC? I think that's not the objective of having that digital bank. And I think any digital bank that I can think of so far is mainly focusing on the country where it started or incorporated. I can't think of a digital bank that started to market its services across borders. Yes, we did that to attract the customers of the GCC. So that's cross-border, but only to get them if they want to have a banking relation in the UK. So I don't know if I made myself clear on that. So yes, it helps in that perspective, but I cannot take Nomo and go to all customers, let's say in Saudi Arabia, and say, okay, instead of dealing with whatever Riyadh Bank or whatever there in Saudi Arabia, deal with me. I'll help you. That's, I think, something it's a bit far stretch in how would digital banks deal. It might happen. It might come. You never know, and I think it will come from digital banks. But what we are seeing now is that yes, it helps to quickly expand internationally your operations by opening in different countries. Instead of having a traditional bank, you can have a digital bank in that country to provide your services.